everyone, and welcome to another episode of SEAL, the chat show where we talk to some of the smartest brains in India from the fields of and academia. Now, this pandemic has left all of us at home. We are confined at home for 45 days now, and hopefully some of us will be stepping out on Monday, May 4th. It's a very, very auspicious day. When we step out, we have no idea about what the new world is going to be, what is going to be expected from us, what's going to be the new business protocol. Will work from home become a regular thing now? Will we allowed to go home? How many people will be allowed to get into Mumbai metros and Mumbai trains? No idea about all of these things at all. What are the skill sets that people are going to require? And the guest that we are waiting for right now, Mr. Anuraag Srivastava, he is here to help us answer some of those questions. Now, just to give you a little bit of background as we wait for Anuraag to join us, I've sent across the invite to him, so he just needs to click on it and he'll be with us, I'm guessing, in a couple of seconds now. We all enjoyed shows like, Being Indian. We've enjoyed shows like Blush. We've enjoyed the NH7 Weekender. We've enjoyed a bunch of these things, and Anuraag has been an incubator for a large number of these businesses and companies. He is currently the co-founder and COO of Rainshine Entertainment Private Limited, a media holding company. He's also the acting CEO of Culture Machine Media. He's incubated various companies in the BPO, KPO, and the healthcare space, including OML, the entertainment venture. That's the same guys who run the NH7 Weekender. He's also incubated Juno Clinic, a mental health wellness company, and Veerdas Comedy, the Veerdas Comedy Collective. He's also helped and developed to lead the investment thesis and business plan models for online video, digital media education, and urban entertainment at Zodius Limited. He's founded the A-Gate group of companies, which included services companies like A-Gate BPO, Graphene Analytics, and Intelligence Technology Services. Outside of work, Anuraag is associated with non-profits in the environmental space. Oh, we're having a little bit of problem with Anuraag. He's not able to join live. Just trying to figure out why is that. Give us a couple of seconds. Oh, yeah. And he should be in right now. Hey, Anuraag.
Hey, hello. Sorry, I was some technical problems. I apologize, everybody.
No, as I was just giving them an introduction about yourself, I was just coming to the bit where I was going to tell them about your work outside the corporate space as well, where you're associated with non-profits like the Abhilasha Foundation and the ncgs.org.in. Now, Anuraag is also a mechanical engineer from the Birla Institute of Technology, and he's an MBA from IIM Ahmedabad. Now, let's get started. Let's get right to it, Anuraag. We are all stepping out after approximately 45 days in Maharashtra. What's the new normal going to be like? What can we expect from this new world of business? What startups are going to thrive? What's the scene to look for?
Sorry, I will just get this technically correct and then should be fine. So thanks, Abhishek, for this, and thank you everybody for joining in. There is a series of things which I think is clearly, as all of you know, the situation around us is available enough and more on various articles which I'm sure you're all being forwarded, etc. But I think the situation for startups specifically is coming from a slightly different situation. Because in my view, the type of startups which are, really there are two types of startups which we have to be aware of. Startups which we are seeing right now, which have a model which, if you really visualize startups, you have to think about them as startups which have a certain model in mind, which they were following. For example, a Book My Show, etc., or an e-commerce company. And then it's the same startups now thinking about a behavior issue change, which some of them may have to now anticipate. So, for example, you could have startups which have a high growth model, startups which have profit focus, startups which have low growth models, early stage startups or seed stage startups, right? So if you really see the ecosystem, there are some startups which have a business model which can allow them to pivot quickly. For example, in early stage one, they can quickly move from doing ABC to XYZ if they think that is important. But the single biggest issue which everybody is now facing in the startup world is the three issues, I would say. One is what is the new model going to be, if at all? And that comes from only one key change, which is how is the behavior of the consumer they were targeting changing? Can they anticipate that? Right? So if you visualize this as a grid where you're saying, look, there is a model which a startup had. Now this, given the model, it was working fine. For example, fintech startups, which were into lending, could conclude that, hey, my model was working fine, but there's a behavior change in people. How do I anticipate that behavior change, right? So you have to marry the model which they had with the behavior which they had. And I think the third thing which most startups have to now think through is the cash which they need. Most startups, as you know, usually have cash flow issues. If they're not profitable, they at least have working capital issues. And usually they have some losses which they have to cover. That is the nature of a startup. And I think this combination of the current model, the behavior which they anticipate changing, and availability of cash from their current investors or future investors will make these startups, most of these startups have to start rethinking how these three, I would say, parameters are playing out in their lives. And I can give you a few examples, but essentially if you see, what is called, high growth models, where you were basically making a model which was, for example, like I said, a fintech model or an e-commerce model. Some of these have very high burn rates because, for example, Swiggy has 6,000 people on their rolls full time. But if restaurant delivery, if they see a behavior change, how do they think? But suppose you were a smaller startup which was doing something which was more profitable, and let's just say an education venture, right? How do they think about themselves now, given the change in this situation, given how behavior will change? Will be very different, right? In the middle of all this, whether it's Swiggy, whether it's a small education venture, whether it's somebody who was doing delivery, or somebody who was doing, take Cult.in, which was, doing a combination of gyms, etc., they have to start saying, how will this change? And therefore, how will I manage my cash flows at the end? Because usually, in everybody's experience, it's 50 years of data. It is almost always that your revenues and expenses in these cases will always be, you can reduce them, but cash flows will reduce faster than your revenues and expenses will reduce. And most people do not anticipate that. So you may be able to cut some costs, you may be able to manage lower revenues, but your cash flows is usually collapse. A good example is, a very theoretical example is that if you had $10 million in the bank and your burn rate was 11 million, and you were only making, and you had $20 million, or suppose you had $20 million in the bank, and you had, you were making a revenue of 10 million and a loss and a expense of, say, 11 million, and therefore we are having a loss of $1 million. You were very confident that, I have 20 months of cash in the bank, and I will survive. But suppose now that 10 million goes down to 4 million, right? Even for 2 months or 3 months, perhaps longer, suddenly you will see a loss of 16, 17, 18 million in your cash flows. And suddenly that 20 month is now worth 3 months. That 20 months of cash is worth 3 months. That is the single biggest issue which startups have to be aware of. So that's the way to sort of think about it, which is combine models, behavior, and cash issues to come up with the correct conclusion for your own startups.
Taking off from there on the behavior front, we've seen, especially in the e-commerce space, we've had a lot of companies in the e-commerce space who weren't heavy into, for example, in the grocery space. And now you have all of these companies like Amazon and Flipkart, and everybody's pivoting to a grocery-led model. But, it's very, very different from what they were doing until 45 days back. So they might be getting the revenues in, but how does this help with the whole cash flow situation? Is that sensible, or is that just something that, just to stay relevant and in people's minds is what they've been doing this?
It's the latter. So again, for most people, it's very important to know that several businesses, and in fact most businesses, have what is called a utilization cutoff for the business model to work. So I'll give you a simple example. If you see Ryanair, the CEO was, and the new airline rules, we say that the middle seat should be empty, for example. He recently said that if the middle seat is empty, Ryanair has no business model. right? He will not fly Ryanair if the middle seat is empty, because there is just no way at 60% utilization the airline business makes any sense. Now, and therefore, for most of these people, if I know many restaurants have pivoted to home delivery. In fact, I know a restaurant, which is actually doing grocery delivery. Surprisingly, I don't know why. But there is just no way the fixed cost which they have, even remotely, and even if you manage to reduce it a little bit, and we'll talk about that later if you wish, about how cost can be reduced. But even then, I don't think they will be able to move. If they go below the utilization, they are dead. And I think the key which some of these people are doing is to make sure the relevance is there. There is a struggle for utilization, but usually the people who they use for doing these things are different from the original staff they have. Staff is not so fungible. You cannot ask somebody who was cooking to start delivering. And essentially, therefore, it usually means a fairly gut-wrenching change internally anyway, in terms of people, staffing, etc. On the face of it, it looks okay, but internally, it's actually a very vast shift. And that's what is happening. So no, I don't think these are mostly decisions to stay relevant. And usually that decision is being taken by companies which have larger cash pools, or an investor like a Walmart, for example, which can give you that support. But it's not because the business model will survive. Utilization and revenues are dramatically falling in all of these companies.
Okay. Okay, this is a good question from Shams Shukla. Can you please talk about the challenges a young entrepreneur has to face given the intention to start after the pandemic? Basically, when do we think of looking at something as business as usual is going to be coming back? And marrying this to your point about the cash flow. So if I had 20 months of cash and now suddenly I have 3 months of cash because my burn rate is going to be so high, what is that going to mean for a startup?
So I think that's an interesting question. I think the single biggest, I think we have to remember the practical aspects of this, the science behind the whole situation, right? I'm sure all of you are seeing enough and more Trump-like, views on cure, etc. But you have to remember that there are two stages to this whole. I don't think significant changes will happen in the way the business will run until a genuine vaccine type of a situation is found. A vaccine being found in the US today or in UK today, number one, vaccines take 10 years to develop. Accelerated vaccines will take 18 months to develop. Very, very, and this is data. This is not, just a view. Very, very quick vaccine development will also take 6 to 8 months to develop. Why? Because even if you see in the newspapers today a new vaccine which is successful, it may be successful on 20 people. That does not mean it can be applied to all of mankind, or it can be supplied to everybody in India. There is still a testing process. So that usually, even in highly accelerated cases like this, is 6 to 12 months, 6 months, let's say. The problem is that from the 6 months when the vaccine is developed, for it to reach a Bombay or a Bangalore into your locality and your local hospital being able to deliver that vaccine, please assume it is another 6 months. A vaccine being developed in the UK will not translate to your local dispensary into 48 hours, right? That's just the nature of the business. That's just the nature of how the world works, right? Perhaps the first few doses will go to the US. It may not come to us. And therefore, we should assume that the best case in this is approximately 12 months, 9 months to 12 months. And therefore, before you have a genuine cure and you can say, look, everything is back to, at least medically, back to normal. Of course, you will have some medicines in between which may work or not work in giving you some sort of a prophylactic, something which will allow you to feel better. That does not mean it cures you, but you may not have morbidity, you may not die, and all of that will help. But I think that is the time frame until which you cannot significantly expect any reasonable change in the timing of any reasonable change in the behavior and the way people are being cautious, etc. And therefore, you have to plan that behavior, in my opinion, for at least 12 months of Delta versus today. And I'm saying that from a very local Indian perspective, not necessarily from a global perspective. I'm talking about us in Bombay or you in Bangalore or some of us here, having the ability to have the vaccine, given to us, to our parents, to our kids. So I think with that in mind, there's a reasonable bunch of data on some other things as well on how this panned out. But with that in mind, you have to prepare if you're a new startup looking at doing things. I think you have to essentially assume that for the next 12 months there will be continuous behavior changes. Like I said, you have to be very focused about which behavior change you are betting on. What you are convinced is going to be persistent rather than a short-term behavior change. So one could say that, look, this is a great time to make masks, and should I therefore buy a mask-making machine? But are you sure that is a long-term business plan, and is it high enough margin? Okay. Right? It's a very commoditized business. The margins in that are very thin. So obvious businesses which pop up to mind may not be the most right thing to do. It could be not persistent enough long-term. On the other hand, there could be some businesses which may make more sense in terms of long-term behavior change, but there is a lot of interesting information around that as well, which I think is worth knowing. So, if you look at the 1918 pandemic, you will see some nice parallels. Of course, the world has changed since then, but that pandemic was there from January 1918 to December 1920, 2 years. Yeah. Okay. Consumer behavior took till approximately 2023 to go back to normal, whatever that normal means. Now, of course, the world has accelerated. We have more technology, but it took 5 years in those times for normalcy to reduce across the world. When the world said, fine, we have sort of forgotten what it is, let's move on, right? But that change happened for that stayed for 5 years. If this whole thing takes 12 months, perhaps you add 1.5 more years of consumer behavior change. But one of the very interesting things worth mentioning here, Abhishek, is that the behavior did not persist beyond 5 years. It's not that people stop. After 5 years, people actually forgot. And so therefore, there's a lot of stuff you will see around behavior fundamentally changing. Some of it, I'm hoping, some of the good ones are worth hopefully keeping long term. Personal health, etc. On the other hand, usually these behaviors don't persist. And therefore, but the unfortunate thing is that in the startup world, it's one thing for Procter and Gamble to assume that, or Gillette to say, people will shave. It's another thing for a startup which usually bets on 1 to 2 years to make a business model establish and move forward. You don't have 5 years to do it. So you have to think within the 1 to 2 years or 3 years what you will do within the changes, within the behavioral change, and then say, this is what I'm betting on. And I think that's the type of startup to go after. And a good way to do that is to basically do this grid, take the behavior model cash flow, make an Excel sheet with 3 columns and fill up your business plan and see which one you're tracking to and saying whether this cash flow will survive for 2 years, for example, or can I make this business run for 2 years using this model different? Map that in your mind and you should be able to reach some sort of a conclusion, in my opinion, on what startups to do. And of course, there are obvious startups which come to mind and others which don't, but and we can talk about that later.
So 2 questions. One was from Work It Out and the other one is from Tanay. One asked, how difficult is it going to be for a new startup to go out and raise capital either from angel investors or from incubation centers? And the second one was, what are venture capitalists looking at when they look at startups? So if, let's say you get a business plan from a newbie, saying that I want to start this thing, this is my idea. Are you going to put money into an idea nowadays? Because an idea used to sell, but will that idea still continue to sell?
Actually ideas did not sell as much as you think. Ideas are supposed to be quite commoditized, by the way, the venture capital business. Being in the VC world myself, people should know that on an average, even a average VC gets up to 50 business plans a week in their email boxes. So you should not assume that your idea is something which strikes and that's what gets funded. What usually gets funded is the scale of that idea, which is that, even if I do a little bit in this idea, it will make sense. And the second thing will be whether the team can survive changes, right? I think what will happen now is that the team surviving changes and being able to pivot will become the single largest factor of what a VC will fund. The idea itself will have to make sense given these behavioral changes, etc. So, for example, if you have an idea about how to bring coaching classes online, because one could assume that for a second that education will move online long term, given we like whether we like it or not. Work from home will become more. It's a decent bet to take. The question is, that's a very vast bet. Are you the guy who's doing cyber security within that? Are you the guy who's building the overall platform to bring people online? Are you the guy who's establishing just a company to set up the VPN networks, which is used to connect me to my office? These are fundamental business plans by themselves. There is no vast business plan which one looks at and says, I will make people work from home. The question will be, can you parse it into a smaller segment and say, hey, while people work from home, there will be more cybersecurity issues, or there will be more connectivity issues. And my software will help you manage connectivity. My software helps you, or my service makes you reduce the amount of bandwidth this video will take. I'm setting up a new platform where people can perhaps get more online consultation, for example, right, from a doctor, perhaps. I think you have to get into the slightly nitty-grittier details if you want to get a business plan funded and say, this, come what may, will do well, even when 3 years passes. And that is what usually will get funded right away.
It's interesting the point you made about teams who pivot, because we've had to make a bunch of pivots at Seal from the time we started.
Yeah, I know.
We were hit by demonetization and then and now the pandemic. So as a team, we like to think we've always been very nimble, and which is why we're still around. So, but yeah, I get the link between a team that is always ready to make those changes. There is no option except being nimble. You can't keep going back to the same old.
So I think the one more small layer which perhaps a startup should look at a little bit more is to assume that the initial funding which you get will be the funding for a longish period of time, maybe double the amount of time which you normally assume it will be. Therefore, profit focus, in my view, in the short term will become fashionable. I think long term it will go back to being growth focused. But I think in the medium term, I would imagine the next 1 to 2 years, companies which essentially expect a lot of burn to get customers and then hope that customer can be monetized, I don't think will get funded. It will be a lot more of the profitability part is where valuations will move to versus the sales, which is usually what valuations were based on, or the hope of a large amount of sale. That I think is a given. We are seeing that across the board. Companies coming in with a huge amount of growth and vast amount of cash flow needs are not going to be looked at very easily for a very simple reason. Usually while people go through this, even if I like, for example, a particular proposal which is worthwhile in terms of current consumer behavior change, etc., but is highly loss-making, that current consumer behavior change may change further, right? Yeah. You do not know whether certain things will change in the next 12 months, 7 months, etc. At that point in time, if there is a particular business model I'm changing and that needs to move left or right, can the team and can the current cash flow allow that, or would we have run out of cash? So each pivot usually in most VC's mind is a new business model. Please remember that. If I was a restaurant delivery guy and suddenly I start doing grocery delivery, while it may sound very similar, it is actually a different business model. And people will normally expect you to say, look, for this, I need to make these 7 changes. Fine, 25% or 40% of my people can be reused. But essentially, I will need to do a different type of marketing. I will need to do a different type of technology, etc. And usually the VC will say, fine, this will need a separate allocation. And therefore, your current raise should be able to do at least 1 or 2 pivots, at least one, is my advice. And you have to think of a new startup with that mindset. Go on.
No, I was going to think if your cash flow is, it's increasingly clear in this conversation that cash flow is going to be very, very important. In that case, how do you stretch a dollar, or in India, how do you stretch a rupee? But how do you make sure that you do a lot more with that 1 rupee that you got? Because if we have to look at 2 pivots and for a longish period, double the time that we were initially looking at, how do we do that?
So I think the 2 things which, so obviously the obvious stuff which you hear from people is about headcount. I don't think that is the most obvious one at all. It's lower cash flow, it's lower fixed costs. I think the places which you reduce cost as much as possible, essentially in the short term try to variabilize your costs. Instead of hiring an office, rent an office which allows you a few seats. And which allows you to go up and instead of buying a computer, rent a computer. There are ways in which a new startup can behave. So there are two ways of looking at it. What should a new guy do? What should an older, what should an established startup do? An established startup has only a few levers available to them, right? But which is really around capital spending. They were planning to upgrade their app. Maybe you don't upgrade it now. You were trying to do basically capex of any type, postpone and see whether you can manage with the current capex. So that's the first one. Usually it's a very large cash flow. Second is of course headcount, which is obvious, but usually see if you had a hiring plan, do you need to continue that hiring or can the current team flex? I would say the third piece, the single biggest piece which most startups spend money on is marketing. Primary VC funding actually goes into marketing. And I think raising the bar on the ROI you need from a particular marketing campaign or what you had expected is critical. So if you expected that a particular app, you were going to launch an app and that app will need 10,000 downloads and it's 30 rupees per download, check if it is possible to do it for 10. And therefore see whether that money can be saved. If you ask me, that is the largest physical pool usually a startup has to save money. The pieces on an average, you have to assume your sales forecast will go down, and therefore net of the sales forecast, net of capital spending, net of headcount, you should and net of marketing, you should see whether you arrive at something. The easy bits, I will reduce my real estate cost. I will change certain expenses which I have on housekeeping and all that. They are the cheap and cheerful bits. Usually they are a very small percentage of your cost. Real estate is, in all fairness, for some startups at least I know. But usually real estate is not so easy to change, and therefore your ability to move out of a real estate contract is non-trivial if you're already locked in, right? And therefore the ability you have to change quickly is usually on marketing, on headcount efficiency, and on any capital spending you had planned for the next quarter. I would say those are the ones to go after.
Yes, please continue.
Yeah. For a new startup, of course, I think the basic principle I have is keep costs variable. Hire consultants, hire variable seats, hire computers, so that if you need another 20 computers, instead of buying them at 50,000 rupees per computer, rent them at 1,000 rupees per month. It may sound more expensive, but it allows you to go from 50 to 20 in a matter of 1 month without suddenly saying, why on earth did I buy 20 lakh rupees worth of computer? What do I do with them now? Right? Etc. etc. Those are some of the tricks which you should use in the short term until you are ready to say, look, I definitely need 30 computers in my company, come what may. I've reached 200 people by the first 30. But initially, do not set it up by buying anything. Set it up by renting. It keeps your cash flows intact and also gives you the discipline, in my view, to always be gross margin focused, because the rent goes every month. It is visible to you every month as something which you have to recover from somewhere, right? You have to have sales to recover it. It gives you that basic discipline. So that's the way to think about cash flows now.
No, despite all of this, there are going to be a lot of startups that will shut down. So in this case, as an investor, this must be a great time for VCs to bottom fish, right? Cash is going to be very cheap now.
It is. So it's actually quite a situation out there. And VCs also, you have to understand, do not necessarily have as much cash as they declare you do. They do, right? Many of them, for the benefit of many of these people here, when VC says I have $300 million in the bank, or I have raised a $100 million fund, usually they are commitments. They are not physical cash lying in their bank account. A few do. Some of the very large VCs do, but most don't. Most have commitment from somebody called an LP, a limited partner, an investor who puts money into the VC, who then gives you the money. So the VC is like a broker in between. And the reality is that some of them do not have 100, and most of their LPs are reneging on the commitments, because usually investors into a VC fund are big businessmen, big family-run houses, and as you can imagine, sometimes their businesses are as much in trouble as anybody else's, right? And that may not so. But given the fact that a VC, assume for a second a VC does have money, yes, it is. Not to give you a VC example, but the type of stuff I'm seeing in the content space is staggering. Right now, if you look at a Netflix or a Sony or any of the large OTT platforms, which have two interesting issues, right? One is that viewership has increased. People are sitting at home and hoping to watch a movie. Unfortunately, as many of you know, or all of you know, production has stopped. So your TV serials are now reruns. You cannot shoot. And therefore, all the weekly serials have now terminated. And therefore, they're under a lot of pressure to buy content, saying, look, let us get it from somewhere. And they have cash, right? These are very cash-rich companies. But one of the interesting things I'm seeing them doing is buying stuff at a very, very discounted price. You know, if somebody's made a movie for 10 crore rupees, they are going and saying, I'll give you 3 crores. If you want to give it, give it. Otherwise, it will never see the light of day. So the amount of bottom fishing I'm seeing is very significant. 50 to 60% discounts being asked for the same asset. If you look at almost any company which will now get funded in the medium term, you should assume that the amount of discount they would have taken from the previous round would be between 25 to 50%.
Massive one.
Yeah, it's a fairly staggering amount of money which you can take because revenues have fallen and all high growth companies value themselves on the back of growth. And unfortunately, that's a physical Excel sheet with real numbers plugged in, which somebody has to either believe or not. And in today's world, it is easier for the VC to say, look, you are saying I will reach 100 crore revenues, but honestly, I don't think you'll be able to reach 50. And therefore, I'll value at half, right? And unless the entrepreneur has some ability to convince them, that delta between 50 and 100 will carry on to the value which you get for your cash raise. So I think that deep discounting is going on. The amount of bottom fishing happening now, companies buying companies which are cash rich, buying other companies. Also, it's a good time to do that, by the way, even for the smaller company. If you are developing a very interesting software, which was, for example, taking people online, and you were raising money for it, it is perhaps easier for you to just merge with a larger company, which is doing the same thing, and basically swap your equity there. It at least allows you to survive. So I think most entrepreneurs also are taking that call, and I think that is therefore happening across the board. I know several companies which I'm personally aware of who were in the process of raising money in the last 4 months. And I think there are some very well-known ones which I will not name, but these are home names which all of you will be aware of, who have 2 months of cash left. I can assure you that such companies will be raising money at half or lower valuation, even from their current investors. Even a current investor who puts in another X $1 million or X crore rupees into that company will say, look, I want double the equity. And usually, unfortunately, it comes from the entrepreneur's pocket. Right? It's the entrepreneur who gives up his equity. Others don't. So I think that is happening across the board. It's unfortunate, but it's a fact of life. And I think that has a direct impact on what some entrepreneurs are able to do and what some entrepreneurs may say is not worth their time anymore. Right? So you will see many startups also, I would say, either maybe shutting down, perhaps because they will say, look, instead of bottom fishing, some of them may say, look, I want to continue, come what may, I always wanted to do this. Some of them may say, look, it's not worth my time. Let me go and do something new, which is worth my time starting now, so that in the next 3 years I can create something new. So we will see a combination of those. But yeah, it's quite cheaply available. It's fairly substantially cheap.
You've spoken about the content space. What the IT space? Because that's what everyone. There's going to be a lot of change in IT. IT is probably going to be the biggest beneficiary out of all of this. How do you see that whole thing playing out? The reason I'm asking that is because if that is actually happening, we want to make those changes at seed so that we ensure that all our kids who are graduating from here, they could be part of that change.
Correct. So if you ask me, if you see content, IT, some of these industries have 2 issues which they, so in all fairness, services, in my view, IT services will, there will be a further hit to IT services, largely because of this pressure to automate will become more, right? An easier example is the BPO space, for example, right? It's easier to understand at some level because if you see, we all know that chatbots were there for a long time. I know some banks which were getting 30,000 chats a day, which a month, which could be equivalent to some 25, 30 people replacing that with a chatbot, which is getting their headcount down from 30 to 5, right? earlier that technology was expensive. Now that, and they were always wondering whether they should do it or not. Right now, given the fact that those 25 people may not be able to come to office, may not be able to sit together, etc., the bank is saying, look, if anyway I do not have the value from all of them sitting together and sharing best practices the way it was earlier, let me move a lot more to the chatbot side. Now, so there is a direct impact there on the BPO side, which I see. The parallel of that in IT will be that there will be more and more automation of certain tasks, right? IT testing, for example, will, it was always under pressure, but there's no time like now for companies to say, look, how can we have a special initiatives? A company which was thinking they will probably look at IT testers to reduce over 2 years is now saying, hey, can we finish it by December? Right? Can we do that same acceleration? On the other hand, the areas which are obviously increasing are this enablement to go online, this work from home. I think these are persistent trends. The amount of headcount, technology, coding, etc. needed there will be significant. A huge amount of, AI was always in fashion, out of fashion. It has been in fashion for 10 years now, if you ask me. But if you are somebody who truly is good at it, you will be one of the most highly valued. It will be one of the most highly valued skills which you will see people seeking. So essentially, anything which allows a person to be able to, bring people into the online space, or be able to reduce cost, or work in a distributed fashion, and if your skill ties in with it, you will fly. There is a huge amount of demand which will come, in my view. Now, obviously you have to be very careful that your skills in that are good enough, because obviously that is what matters. You can't be an average coder, you need to be a good one. But I think given that, I don't think there will be an issue with the job front, at least on the technology side. Many other sectors will also do well in my view, but for example, insurance I think will again pick up. But the fact that the vast majority of companies will go online in a certain way will actually allow them to sort of do well. The other area which, on the management side, if you look at general businesses, there were many companies which are in this very interesting space where I believe they were not getting enough adoption, but they're getting it now. I don't know if you know Licious, which is a meat delivery company.
The meat delivery. Very tasty.
Yeah. So, well, here's the thing, the Licious guys are known to me, and they are in a situation where, Indian behavior for meat delivery was always about, I know my local vendor, I trust his meat, so why on earth will I buy it from this company, right? And so Licious has a persistent problem about adoption, right? Now, for good or for bad, people have adopted it now, given that the meat delivery guys close irrespective, and they have seen huge jumps in that, right? So a company like Licious, which was, I'm not talking about a generic e-commerce company, but a company which was in a certain sector, which is now, which has suddenly seen adoption, online pharma, for example, right, online consultation. Suddenly, these guys will be hotbeds of hiring because they will not triple or quadruple in size in a matter of months, or in a matter of a couple of years. And I think these will be great opportunities to join, because the amount of innovation which will be needed there will be very significant. So in my view, I think there will be both opportunities in the tech side, and each sector will pivot. Some sectors will probably never recover from it for a long time, event management being one. For example, in our content business, that's a very significant source of revenues for almost any artist you know of. And we just don't know how that will move. On the other hand, streaming platforms like this may help them, but will they be able to monetize? We do not know. Right? Can you really make money by going online and doing a comedy show? Is still to be sort of tested. Book My Show is trying a lot of innovation. There's a lot of innovation there, but it's a good example of a company which had its, as I said, the business model was right. Everything was going fine, but starting now, it was the right business model which is now hit by a different behavior. Right? And then there were some who had a wrong business model. By wrong, I mean high growth, high cash business model. And have a behavior change. I think they will be in trouble. So I think what you have to do is to identify, even as you look for a job instead of doing a startup, but if you want to join a startup and grow with a startup, then try to map this little grid and say, look, are they in the right place? And are they doing the behavior change? Are they mapping it well? And then potentially look at either doing a startup with them, or doing a startup in that area, or joining them, right? I think those opportunities will persist. But I think a little bit more due diligence on that company will be fairly critical if you want to establish a long-term career there. But back to IT, etc., I think the technology area, generally speaking, is at least going to be shielded, in my view, for a longish time to come in this current situation, right? Of course, we all know about the tourism industry and the hotel industry and the airline industries. Those are obvious, and they are not necessarily, but they won't even be hiring, so it's fine, right? So the number of industries which are not going to do well is well documented. All of you can read it up on the internet. I think the trick is to identify industries which will do well, and then see what one can chase.
What about markets that will do well? Because you have Bombay, Delhi, Bangalore, especially Bombay. We are pretty much, our whole city is like a red zone or a containment zone. So if Bombay is been affected so badly, how do you think that's going to play out in tier 2 and tier 3 towns? Are those places going to get, are they going to get worse? Are they going to get better? What's the outlook for them?
That's a very good question. It's if you see the generic understanding of a tier 2 town, it was always a lot of people, but not too much purchasing power. That was the historic way a tier 2 town, and of course everybody wants to be there, but it should come as no surprise to most of you that it doesn't make a lot of money. I used to be in Procter & Gamble, and I can give some old data. I've been out of the company for 20 years, so hopefully they won't sue me. At one point in time, Procter & Gamble, which sells, for example, for your benefit, Whisper, Ariel, Pampers, etc. It's a competitor to Hindustan Lever. Its sales from Nariman Point to Kandivali used to be higher than Bihar, West Bengal, and Orissa combined.
Oh,
right. So people underestimate how much a big city has buying power, right? However, of course, over time that has changed, and everybody keeps on saying we should go and deliver in a smaller town. But if you look at Swiggy, or if you look at some of the delivery guys who will supply to a smaller town like Ranchi or Nagpur, usually they make a loss. So while they may service it, it's not very profitable. I think that, and therefore the issue with the green zones being open and therefore allowing people to, to do business there will become, on the face of it, looks not a good economic decision. Having said that, let me tell you the single biggest delta which will come. Given the fact that distributed work from home is starting to happen, and given the fact that, in these red zones for a long time to come, so you have to understand, everybody, that companies make money not only on somebody buying, but the thing being also available. It's both demand and supply, right? Supply chains in big cities are completely disrupted. In a situation like today, when a Hindustan Lever is probably everybody's stocking up on everything Hindustan Lever makes or Kellogg's makes, you would imagine Kellogg's sales has doubled, because if I used to buy 2 packets of cornflakes, I've gone and stocked up on 5, right? Except if you go and see Kellogg's books, you will see a very significant decline month on month in their actual sales. And the reason that has happened is because distribution has collapsed, right? It has to be available for you to buy it. I know Dettol sales, you would imagine Dettol would be selling a lot and they would have made a killing. But on an average, Dettol in the last 2 months has sold lower amounts than Dettol has sold earlier in the previous months, because the distribution chains are not working, right? So it is quite shocking how these work, and it is counterintuitive. So some of the most obvious products are actually not selling. Having said that, the small towns, distribution is intact, right? And because distribution is intact there, because people will move over the next few months and years to having more available cash there, I think that people are underestimating how much the green zones and the smaller towns will now give to them. I think you will see a huge shift to more and more distribution and potentially wealth generation and other stuff into the small towns. People will start betting on them, and people there will start increasing the amount of spend they have because of the fact that also, as people move into distributed towns, if the well-documented example of TCS and dozens of companies sending more people to a Ranchi or to a Jamshedpur or to a Lucknow, Lucknow GDP will go up, buying power will go up, right? And what will happen is you will start seeing more and more sales there. So my bet is that small towns, which may look small today, will become one of the most significant drivers of this consumption. Now, this may be a bet until urbanization again pops back up, which means for the next 2 to 3 years you will see this jump. But in 5 years' time, I'm sure Bombay will recover. and go back to being a huge source of this, right? So nobody's asking anybody to abandon a territory, but this is the best time in my view to go to a smaller town, simply because the distribution is intact, people will buy, and this is a great time for you to say, look, this is my brand. Please buy this. Please buy Kellogg's. Do not buy this other local brand which was poor quality. This is the time to do it, and you will see companies doing that.
And then this also sort of ties into the last session we had with Chinmay, where he spoke about how the blue-collar workers are probably going to be migrating back to their towns. And if they're going back home, and you're saying that there are going to be more job opportunities over there, will these people then come back? Because why will I work for 500 rupees a day in Bombay and live in horrible conditions where if I go back to my hometown in a Lucknow or a Ranchi or a Madurai, I can stay with my family in a larger place than what I'm staying in Bombay?
So I'm sure Chinmay would know this better, so I do not want to second guess. I'm sure he'll be more insightful. But, again, I see this going into a up and a down, practically. Yes, there is a medium-term impact on migrants going back home, in my view. But you are forgetting two things, right? There is, if there is enough opportunity, some of them will stay back. But all said and done, a carpenter in Bombay makes 5 times the amount of money, not 20% more, but 5x more than they do in their hometown, right? So at some point, my suspicion is that he will go back, he or she will go back, settle down, and then realize after maybe 6 months, 9 months, or 2 years, that unfortunately it is not enough. And at that point in time, what will make the person come back is obviously usually economic. It will not be personal, clearly. I'm sure they have decided that this is a disgusting place to stay, and therefore will not come back to big cities. But I think economic factors will make migrants come back at some point in time. Meanwhile, the problem will be, and I'll tell you where the issue will be. I actually see migrant wages going up in Bombay significantly, because while the gap is there, the amount of automation and the amount of ready-made stuff will increase as a behavior so much that it will become more difficult for us. So, made to order, for example, what migrants labor do. So, for example, in Punjab, if the migrants vanish and go back to UP, fair enough. But Punjab, given it is Punjab, will probably do more combined harvesters, right?
Yeah.
And when they come back, they will see the 20,000 migrants who were needed in a particular district now needs only 5,000. Yes, they will need the 5. But I don't think people are waiting. So, you will probably, if you needed a carpentry stuff, I'm sure people can buy ready-made furniture and you will see more of that. One of the things which will, however, begin is that the small distributed towns, for example, making furniture and supplying. So if you see Indus Craft, which makes furniture in Udaipur and supplies to the rest of India, doing very well, will probably start happening more. And therefore, the carpenter doesn't really need to come back, because he will probably get almost Bombay rates sitting in Udaipur.
Yeah.
And that's his hometown. Why on earth should he come back, right? I think that will certainly happen, but unfortunately that will need an entrepreneur. He cannot do that himself. It will need some entrepreneur based in that town to say, look, I am going to set up something in Udaipur and I will use this labor to supply to the rest of India. That will work. And I think you will see a lot more startups in that area. That's a real opportunity in my view.
Oh, all right. Well then, we've been speaking for 50 minutes now, and we've come to the end of our time. Time just flown. Thank you so much, Anuraag. Anything else that you want to sort of add that I may have missed out of?
No, not really. Thank you so much for this and appreciate it so much. I hope people who are watching this continue to do startups. It's the only way to live in the real world, in my view. Be an entrepreneur before you look for a job is my only advice. And then look for a job if it fails, and then go back to being an entrepreneur after you earn some money. Is my only advice.
That's the cycle.
That's the cycle.
Thank you so much, Anuraag. This has been an absolute pleasure. Very, very informative session, and looking at the list of questions that kept coming. Sorry we couldn't answer all the questions, but this has been a lot of fun. Thank you so much for that.
Thank you so much.